Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with a discussion that you will all like. It's about the stock market. It's about next week, earnings from last week, companies from last week, companies from this week. Let's look at what is going on in the market. How you doing, Mr. Dan Bird?
I'm doing well. How about you?
I'm doing well, man. Do me a favor, show your newsletter because people got to get this thing. I have not read it
Right.
yet, but I will read it today. And then we're going to talk about what's going on in the market and look at some companies, which we haven't done in a while.
Right. So yeah, my newsletter, this is something I do every Saturday, mostly for my own research, but I was sending out to friends and family. And
yeah, I've been getting it for well over a couple of years. Yeah.
Yeah, you've been getting it since we used to work together, I think.
Yeah, so that's been 4 or 5 years. Yeah.
Yeah. Yeah, but I've been doing this for a lot longer than that.
You're not sharing, by the way, if you think you're sharing.
Oh, I'm sorry. Hang on. One more button I had to push.
There you go. Breakpointtrading@gmail.com, just in case you are listening on the podcast. Do yourself a favor, send that an email, ask for the newsletter. He will be gracious enough to send you this week's, and you will get it next week. So thanks for all you do.
Yeah, and there's usually a lot of stuff in there. It's a lot of technical analysis in there. I put some links to other articles a lot of times. So sometimes when I've had some of my friends tell me this is way over my head. This is just too much for me to understand and figure out. And I get that. But if somebody's really interested in it, I'd say just give it time. Just keep reading and keep watching and try to understand it. And like in the very beginning when we started talking, it's like learning a language, right? You try to learn French, and in the beginning, you're interpreting you're in your mind changing the French words to English words.
Correct.
To try to understand what's being said. Eventually, at some point, you stop making that translation and you just know what it means.
Yes. And
that's what charts are like.
Yeah.
At some point, you just look at it and you just kind of know what it's doing. So, but this is if anybody wants to be on this Breakpoint Trading, just send me an email and I'd be happy to add you to it.
Very cool.
All right. So before we get into individual stocks, let me bring up the most important chart that I have.
Okay.
And I actually said this in my newsletter, and I put a link in my newsletter. Yeah, it's and I apologize, a little confusing because when I started the paragraph, a lot of times it's just a train of thought in my newsletter. I just start typing stuff that I'm thinking, and I try to keep it coherent, but it's not always. Sometimes it's a little disjointed.
Sure.
So I said, this is the most important chart. This is one that you should always look at. In fact, here's the link to it.
Yep. And
then I wrote like 3 or 4 more paragraphs before I actually put the link.
I've done that.
And I had one person send me a note saying, "You forgot the link." I said, "No, I didn't. It's in there. You just have to keep reading."
Yeah, scroll down.
It's further down. All right, so this is the sustainability, or let's call it the rotation ratios.
Yeah, I've always thought this was more rotation. Yeah.
Rotation, yeah. So for those that haven't seen this before, we look at the stock market. This is the S&P. This is December. The market was going up and hitting all-time highs in between these 2 green vertical bars. While that was happening, big institutions were rotating out of growth stocks and rotating into defensive or value stocks. So as the market was hitting new highs, institutions were rotating out into defensive areas. Retail traders will not ever see this unless they can put together something like this. So retail traders just think the market is going up, it's going to the moon, and it's never going to stop.
Yeah.
But institutional traders are like, yeah, we're done. We're out of here. We're going to start rotating all of our money. And they can't do this very quickly. So it takes them weeks and a month or 2 months to finish that rotation. So you can see as the market continued to head lower, the rotation continued to go lower. So institutions were still selling, right? Or rotating into defensive areas.
Correct. Yep.
Until we get to June. In June, we had that big CPI number, 8.6. Market dropped 3 days in a row, big time.
Yep.
Went down here and hit what I'm calling the bottom.
Okay.
June 16th and 17th right there. But look what happened. Look what changed. as the market was hitting new lows, these ratios started hitting new highs.
Yeah.
It's the opposite of what happened over here.
Yep.
So this is saying that institutions are starting to rotate back. They're taking the opportunity of all of these discounted stocks now because the market sold off so much, and they're starting to rotate back into growth stocks. And this was something that wasn't visible to most retail traders. They just thought the market was heading, that it will never come back again.
Yep.
Because inflation was going up, and inflation, was worse in history and will never come down again.
Right.
So everyone kept selling, but institutions started accumulating growth stocks again.
Interesting.
So this is discretionary things that you would like to buy versus staples, things that you have to buy. So this might be a Tesla over here, which, by the way, Tesla is the number one stock in the discretionary sector.
Interesting.
They represent 24% of this whole sector.
Oh, wow.
Just Tesla. Amazon represents another 26%. So it's 40 or 50%, just those two stocks.
Wow.
Right. Staples are, if the market goes down, you're still going to buy toilet paper, right?
Yeah.
And
Procter
toothpaste.
& Gamble and
Hopefully you will. And
Yeah.
deodorant.
Yep.
So this is, institutions were rotating into these staples because they knew even if the market goes down, people are still gonna have to buy that stuff.
Yep.
So they're rotating there. But now over here, they're rotating out. They're rotating back to discretionary.
Interesting.
This is the NASDAQ. So technology versus the overall S&P starting to head higher. Here's technology itself, just technology versus the S&P.
Yeah, really ramping.
Look at that.
Yeah.
So all through this period here, when it started, where this green line is, it came back and touched the low, but it never went below it. And since then, it's actually accelerating faster than the other areas.
Yeah.
So technology is accelerating. This is growth versus value, and this is small cap growth versus value.
Okay.
So until these start to roll over and go back down and take out this low right here, I don't think we're going any lower.
Yeah. And folks, the good thing about this is Dan has his own playlist. You can go back weeks and weeks and weeks and see that we haven't deleted anything. You could see him. You can see these charts morph over time. So
right.
Very, very cool.
Yeah. And actually, I put the link to this in the newsletter. So if people put it in their favorites list, even as I add more arrows or extend the arrows or change the arrows, whatever, it's still going to show up.
Nice.
They'll still be able to see all of this evolve over time.
Very cool.
All right. And by the way, here's that resistance right here that we're headed back to.
Yep.
So this is what we need to watch early next week, Monday or Tuesday. See if we get through 4150.
Okay.
All right. So let's go look at some.
Yeah, let's look at some stocks. We haven't done that in a while.
So where do we want to start? You want to start with some of the ones that reported last week?
Sure. Why don't we do Apple?
Apple. So you and I talked about this after we finished our session last week, and
we did.
Apple's one that I talked about, and I showed you what I like to look at in these stocks, especially for earnings coming up, is the relative strength ratios.
Okay.
How are they doing versus their industry group?
Yeah.
Are they doing better than their industry? Are they doing worse than their industry? Is the industry moving up or moving down?
Yep.
Because that tells you what Wall Street is thinking.
Yep.
That gives you a sense for what Wall Street thinks when they're going into earnings. Now, before the earnings happen, a couple of weeks before, companies go into a quiet period. So they can't talk about anything.
Yeah.
And a lot of times you'll see stocks move up before earnings. We'll look at Roku. I don't know if that happened with Roku or not, but a lot of times you'll see it move up a couple of days before earnings, and people say, "Oh, look at that! There's somebody knows something."
Sure.
Well, no, nobody knows anything. They can't. It's a quiet period.
Yeah.
But the month before that, Wall Street goes out and interviews and talks to CEOs and CFOs.
Right.
So they have analysts that focus on certain major companies like Apple and Amazon. They go out and talk to the management team 3 or 4 weeks ahead of time, and they get a sense for the business. They get a sense for what the business is doing. Now that will show up in the relative strength charts.
Okay.
That's what you will see. So let's look at Apple. And this is the Apple chart. Look at that. This is after they reported right there.
Yeah. Good numbers. Yeah.
You can kind of see it down here. I'm going to bring up a different type of chart, but this is the industry, the one in red.
Uh-huh.
That's the industry. So you can see Apple's industry has been headed higher.
Yep.
And you can see Apple itself. So this is Apple relative strength to its industry. How is Apple doing versus everyone else in its own group, all of its peers? How is Apple doing versus its peers?
Got it.
And you can see Apple is outperforming its peers.
Yep.
Now, this is what I mean. Wall Street goes back a couple of weeks and they'll start talking to management.
Yeah.
And if they think that Apple is going to report good numbers, then you'll see this relative strength here.
Weeks ahead of time. Yeah.
Improving, right?
All right. So let's flip over to Roku because that went the other way.
Yeah. So the one point I want to make is that it's dangerous to buy a stock before earnings.
Yeah.
If you have a stock that's a long-term investment and you believe in the company, then sure, keep it through earnings. And even if they miss and it goes down, maybe you even want to buy more.
Right.
If you believe in the company.
Yeah.
But if you're about to buy a stock and you're a week or less, or even 2 weeks or less before earnings, it's a very dangerous time to do it.
Yeah.
Because you don't know what the earnings are going to be.
Yeah.
Unless you look at something like this. Now, you still don't know.
Yeah, of course.
This is going to give you a better understanding, a better view of the probabilities.
Okay.
So to help you to limit your risk. So in the case of Apple, looking at this, it's probably okay to buy Apple before earnings. They're probably going to do pretty well.
Okay.
And you can see right here, Apple actually went up a couple of days before earnings. And then the earnings came out and it shot even higher.
Okay.
All right. Let's do Roku.
And then I have a few companies that are releasing next week we can look at.
Yeah. So here's Roku. Roku's industry group looks okay. They're actually improving over the last month or so.
Okay.
But look at Roku itself. This is Roku's relative strength versus its peers.
Yeah.
Roku versus its peers. Right? It's below its moving average line. So even though its industry, its peers have been improving, Roku is one of the worst companies versus its peers.
Got it.
So looking at this, even if you forget about this little blip down here, because that happened because of earnings, they had a big gap down right here on earnings. Even if you don't even look at that part, just look at everything to the left of it. Yeah. You can still tell that it's going down.
All right. So I got 3 companies that are releasing next week. We can just poke at. You ready?
Yeah. Hang on. Let me see if this one.
Okay.
I don't know if this shows any better. It's a little shorter time frame, but it's basically the same chart, just not filled in. So this is Roku's industry. So there's its peers, and this is Roku versus its peers.
Yeah. Got it.
Both cases, it's going down.
All right.
What else?
Let's try. So we got 3. I have 3 that are reporting next week. Let's do PayPal first.
Yeah, I looked at PayPal earlier. So here's PayPal.
Okay.
Let me flip back to the other one and see if this one here. Oh, no, that's not the one. Actually, I think it's the default one. This one. All right, so here's PayPal. So you can see its industry group is
not doing great.
Not too great.
Nope.
It's starting to recover a little bit here, but in general, over the last 6 months, generally heading lower. Now the market was heading lower too during that period.
Sure.
But in general, the industry group itself is just kind of below or hugging its moving average line.
Okay.
But PayPal is actually performing a little better than its peers.
Yeah, very recent, last couple of weeks. Yeah.
All right. So PayPal has actually been performing a little bit better than its peers.
Okay.
So, and you can see the stock right here starting to go up a little bit.
Okay.
So this tells me that PayPal might actually be okay. They might actually report okay.
Okay. All right. Very
We'll
cool.
see.
We'll see. Yeah, we're just having fun. 2 friends on a Sunday having fun. Let's give you another one that people talk about all the time. Robinhood.
Oh. Okay, here's Robinhood. The price action is kind of going sideways, but its moving averages, it's 8-day, 21-day, and 50-day are all kind of converging right here at the same place.
Wow.
And it's a little bit above them.
Okay.
Here's the accumulation distribution. That's the other important thing to look at.
Oh, they're being accumulated.
Accumulation distribution. So it looks like Wall Street's accumulating.
Interesting. Okay.
Its industry group is starting to recover,
Mm-hmm.
but Robinhood is not performing very well versus its peers.
Yeah. Okay.
It's actually heading lower. So I am undecided on Robinhood. I think there's a lot of risk in this one.
Yeah. All right. How about Lyft?
Lyft. Here's Lyft. Here's the accumulation distribution. Has
Oh,
just
look at
just
that
been
little
heading,
spike.
It's been heading lower since May,
Mm-hmm.
but it did get a little spike here in the last couple of weeks.
Okay. Interesting.
All right. And its industry group is starting to recover,
Mm-hmm.
beginning to come back, but Lyft versus its peers is still horrible.
Yeah. Okay.
Not doing very well versus its peers. This is not one that I would buy before earnings. Robinhood, I would not buy before earnings. This one I would not buy before earnings.
Right.
PayPal, I might take a chance on it.
Yeah.
With a small position.
And then I think one of the kind of bread and butter ones is I think it's Clorox reports next week.
Clorox price action is rolling over.
Okay.
The 8-day is getting ready to cross the 21-day, and when that happens, that's usually a sell signal right there.
Mm-hmm.
But the accumulation distribution looks strong.
Mm.
So, in fact, it's at its highest in 7 months. What I've got this set to 7 months.
Yeah.
Accumulation distribution is the highest in 7 months.
Interesting.
Its industry group is just falling off a cliff here lately,
Yeah.
but Clorox is actually performing better than its peers.
Interesting.
So Clorox actually this might be a good time to buy Clorox.
All right.
They might actually have a good report. We'll see.
All right. And just for fun, everybody talks about Tesla. Now, Tesla reported earlier so that they don't have earnings next week. But what do you see inside the Tesla chart?
Tesla's, taking off.
Yeah.
So remember I said discretionary. Tesla is
rotation
one of the biggest,
into,
or the biggest in the discretionary group.
Mm-hmm.
So because of that, it's
you could have guessed what this chart would look like.
Right. Yeah. So everything looks pretty good. A little concerned about it being above 70 up here. That's usually the time that it reverses. Mm-hmm. It's right at its 200-day moving average. Mm-hmm. Tesla is representative of the overall market, actually.
Yeah.
It's hitting some resistance levels right here.
Yeah, which is what you're seeing it is the market, right? That makes sense.
Right. Accumulation distribution had been, going down since April.
Yep.
But it's starting to recover here in the last month or so.
Very cool. Okay.
It's starting to go up. Its peer group is recovering, getting stronger, and Tesla is getting stronger against its peers.
Nice. So
Tesla actually it's already reported.
Yeah, it did.
So it may actually, it may come down with the market when it's resistance levels.
Sure.
But I don't think it will come right here. 800 is probably a good support level.
Got it.
And the 21-day for sure is good support. And that's at 771.
Yep.
And that might go up a little bit. So somewhere around 780 to 800. If it does reverse and comes back to there, that would be a good time to buy.
Cool.
If it does, it's going to be similar. And, watch the whole market. What I talked about in the last video, about the inverse head and shoulders. If the market comes down and then bounces and heads back up and breaks out of that neckline, then we're off to the races and we're headed to all-time highs. And a lot of these stocks will probably look similar to that. A lot of these stocks will come down and hit a critical support level, like the 21-day, and then turn around with the market and just head higher.
Very cool.
Tesla might be in that group. Let's look at AMD, which I think reports.
Oh yeah, AMD is the one I was starting to remember. What's the big one next week? AMD.
AMD. This is the one that I own right now.
Okay.
Now this is probably a longer term investment for me, actually, because I think AMD is a great company. And they bought Xilinx, which is actually going to add to their earnings. Xilinx is actually doing really well. At any rate, this one, the 8-day crosses the 21 there. The 8 days is getting ready to cross the 50-day. The price is above all three of them. Still got the 200 to hit up here.
Okay.
Look at the accumulation distribution since the beginning of July.
Yeah, definitely people rotating. These are people rotating out of Intel and into AMD. That's what that is.
Yeah, actually rotating into technology in general.
Okay. All right.
And then the industry group is getting stronger. So this is the chip sector. It's getting stronger. And AMD is looking stronger against its peers as well.
I like it.
By the way, these other two down here is the industry versus the sector. So this is the chip industry versus the whole technology sector.
Got it.
And this is the sector versus the S&P. So this is the technology sector. And I showed you that in the
yes,
rotation chart that it was actually accelerating higher. You can see it there.
Yep.
It's accelerating too. But the most important ones are these top two. How does the industry look? And how does this stock look versus its peers? Is it better than its peers or is it worse than its peers?
Very cool.
So AMD actually looks pretty good.
Yep. So this is a lot of fun. This is no advice here, just looking at pretty colors on pretty charts. These are all companies that report next week. Dan, one more time, show your newsletter.
Yeah, let's look. This is IBD. These are some of the ones coming up next week too. So Quanta Services, Lantheus, Eli Lilly, Vertex, LPL, Chevron, and Exxon.
They reported on Friday.
They already reported.
Yeah.
But Oxy comes up next week.
Warren Buffett's favorite stock.
Right. Enphase already reported.
Yep.
Solar Edge. All the solar stocks, by the way, are doing really well.
Yeah, I bet. Yeah, Europe is.
Just out of curiosity, let's look at Enphase because that's always been a strong one. Look at that.
Woo! Wow.
And look, here's the industry, and here's Enphase versus its peers. It's consistently been above the moving average.
Yeah.
Consistently outperforming its peers. So this one,
Europe's going solar. That's what I read last week.
Right. So I mean, looking at this is a good example. Looking at this stock versus its peers is consistently outperforming its peers. This is one that would probably be safe to buy before earnings.
Yeah.
ExxonMobil reported last week. Right there.
Yep.
Big candle.
Yep.
Accumulation distribution heading higher. Here's its peer group heading higher, but Exxon actually is rolling over here. So it's, I don't know what the deal is with that. It's the rest of its peers must be doing really well. Here's the energy group versus the S&P, which has actually been struggling lately.
Yep. Starting
to come back a little bit.
Yeah, well, people like you think the Fed's going to be done and a recession is coming, so oil will be less demand. That's what that's all about.
That's exactly right.
Yeah, yep.
And this is Chevron. So Chevron, big gap up above its 50-day, above all its moving averages. Peer group is improving, and look, that's a complete opposite of Exxon.
Yeah.
Right. So it had not been looking too good actually.
Yeah.
But it's starting to improve, and its industry group is definitely improving within the energy group.
Right.
And then Oxy, which is coming up next week, Warren Buffett's favorite stock. So this right here, it hasn't reported yet.
Nope.
But people are anticipating it. So the 8-day and the 21-day, 8 days above the 21, they're both getting ready to cross the 50. The price is already above the 50. The accumulation distribution is looking really good. So Wall Street's accumulating. Here's its peer group. It's improving, and it has been outperforming its peer group right here. So this is one that probably would be safe to buy before earnings.
Interesting.
So this is what I look like if I'm looking at something and I know earnings is coming up, but I really want it anyway.
Yep.
I look at the relative strength versus its peers.
Got it. Cool.
That gives me a sense for whether it might beat earnings or not.
Yep. Lots of fun. Love looking at companies. None of this is financial advice. This is just two guys looking at charts, having a conversation. Dan, one more time with your newsletter, please. breakpointtrading@gmail.com. I appreciate you. We'll talk next week.
Sounds good.
Thank you, buddy.
Take it easy.